YouTube, what's going on? It's King J again. This is my fourth attempt at this video today. I'm about to lose it. I should be doing this at night when no kids are up. So anyways, because they're all curious, it's like, I didn't know you do this. And anyways, they should know. They're on my videos. So anyways, this is another Forex blog. Um, Coming back with something I should know, and I definitely do know. This account, you see this? You see this balance? That's, you know, it's not the fact that it's drawn down. That doesn't bother me. I could throw money in there if I wanted to. Like I said, I have a pretty decent job. I could do that. That's not the point. The point is not to just keep throwing and throwing $100 at a time, $50 at a time in an account. It's to have a high enough balance so that when you risk a certain amount, the lot sizes actually calculate out correctly. But a balance like this, anything under $500 or $1,000 is not going to be correct. This is not going to be correct at all. And then we see these guys with these, 500 to 1,000 to 1 leverage accounts from these offshore brokers. You gotta be real careful with that. You gotta be real careful with those guys because they're trying to, they're showing you the account flipping, how they can do it. Like, you can only do that so many times before you just blow it up and lose all your money. Most of those guys are trading discretionary. They're not, they're just like trading what they think they feel is like where the momentum is. Half of them don't know how to read price action, really. That's why I don't do it, because price action is so, like, discretionary. They go, well, no, it's not, blah blah blah. I can draw lines. Yeah, you can draw lines. This is like my own opinion. Like I said, don't take what I say as the gospel. But honestly, a lot of those guys do that. They'll draw lines and do the same thing I'm doing. I'm just doing it through, like, technical analysis and algorithms, and I'm getting this. But what's happening is I was using that other algorithm, and I don't know if I like it. I really don't know if I like it that much. So I stopped using it. Um, but that's what R&D is for. R&D is for that kind of stuff. The other algorithm that's running on FTMO, I like it, but I was having all kinds of issues yesterday. First, this algorithm right here, it wouldn't trade. Then the other algorithm on FTMO, like, the charts were freezing up, and it wasn't FTMO's fault. Just so you know, it was more my fault. The indicators I was using, the number of bars in a chart I was trying to have, it just caused a lot of issues. The whole platform would freeze. But the other platforms that I had open on the VPS, oh, they were totally fine. They were totally fine. So I'd rather get all this stuff worked out, all this stuff, like, worked out, test it out, make sure what I'm saying is correct, and then go try the FTMO accounts, because I'm on my second free trial with FTMO. I'm gonna have to do another one because I'm not going on FTMO even if I have one good day on an FTMO free trial. I want to do good the whole entire time and not be scared to trade. Like, some people will tell you, oh, well, I'm gonna trade, and then, like, when I meet my goal, I'm just gonna turn down my lot size. I'm like, no, I'm just gonna keep mine up. Why not? Are you scared? Are you scared to trade? Are you gonna trade, or are you gonna not trade? Because then you turn down lot sizes, and then you're gonna wish you hadn't one day, and then the market's not gonna give you what you think it's gonna give you. Then you're gonna get screwed on that. So always trade with no fear, but be smart about it. Be very, very smart about how you trade. Like I was telling in the last video, risk exposure is a huge, huge deal. Signals that wait too long to get in after prices move too far is a huge, huge deal. This is what I've tried to fix in the last week, where I've been working with a programmer, and I'm just like, I think we need it. I think I'm going to do this, this, and this. Can you change this? He's like, okay, I'll change it. Cost this much. Okay. Doesn't matter. Like I said, right now this stuff's all a hobby to me, so people can brag and boast about what they want as far as that goes. But I'm just on here, and this size account won't work. Now, if I still had this much, or my initial deposit, or whatever I added to it, the 150 added to it, yeah, it would be, it would be decent. It would work. But I'm not about to throw another 500 at this account until I know that anything else doesn't work. Works on at least a demo. I know I have the low spreads because I'm getting, I'm using the commission style. You can choose if you're at least if you're American on a Wanda, you can choose in a real account whether you want to have really the lower spread, like it's like a pip and a half lower spread plus the commissions on each side, or you could just do like regular spread, no commission. I chose the commission just because I just was like, well, I could just get in earlier. But they're gonna take it out anyway. They're gonna take it out when you enter. They do it when you enter and you exit. Yeah, it's interesting how they do it. A lot of brokers, well, it just depends on which broker. Some brokers I've seen them, they just take it out once. They calculate it and they take out the commissions once. But whatever, it doesn't matter to me. At the end of the day, the main point is like, don't be undercapitalized. Do not be undercapitalized because that's a huge issue with forex traders. They think they're gonna flip these accounts, and you see these guys on YouTube flipping these accounts. They don't do that every day. They don't do that or at least every month, every week. It's highly dangerous trying to flip an account like that. You know. Now, if they said I'm gonna flip it, I'm gonna do a $200 account to like 20,000 in like 8 months, or like 6.5 months, or 5 months, 4 months, 3 months, I'd be inclined to believe them. Then 200 to 20,000, I'd probably believe them. Like maybe like 120 days for something like that. I'd probably believe them. But like, these guys going from 200 to like 5,000 in a week. You gotta be careful with that crap because that stuff is like, I mean, I'm already saying the stuff that's risky. But Forex is risky anyways. That's why I have this disclaimer in my videos. I'm not a professional. I don't know any of this stuff in general. But this stuff's risky. Don't take on more risk than you actually need to take on. There's a reason why they say don't use more than 1 to 2% of your account at a time. Now I could go and use 3, 4, 5% and get the lot sizes to come up on this account to come up, but why? Why would I do that? That doesn't make sense. Because now I'm risking like 4, 5, 6, 7%. So then I'm gonna do what when the account like draws down like 35% in one day? Then it doesn't make sense. This is why you take smaller risks, because you don't know what's gonna happen. I mean, yeah, you should have a daily loss limit, but at the same time, don't be taking on that much risk. These guys that are flipping those accounts, they're taking on a huge amount of risk. I guarantee you, they're taking on more than 1-to-1 leverage. Really, on a 1% account, when I was doing it on FTMO, it was 100. What was it? They got 100-to-1 leverage, or 50-to-1 on CFDs and cryptos and all that stuff. Because that's what I like doing on there. Because I can't do it with the Wanda on a real U.S. account. But seeing as how those guys are not brokers, they're just a group. You can trade CFDs with them on a demo, quote unquote demo. So, with that being said, yeah, that's pretty much it right there. I'm just gonna stop this account until I can fit, and that strategy. I'm gonna stop this account and that strategy until I get the other strategy to work. That's another one of my things. Just work on one strategy at a time. Just work on it, perfect it, get it right, make it work in the market conditions that it needs to work in. Whether it's a trending market, if it's a trending market, it's probably a pullback or a breakout type setup. If it's non-trending market, it's either a pullback or it could be a pullback, but it's probably like a market that's in a range. You got to decide what you want to do. Just me personally, and this is my own personal opinion, no professional opinion, but my own personal opinion is like I don't like trading ranges. You don't know, because eventually they'll break out. They all do, and it's usually in the most busiest sessions is when they do. So you'll be like, oh, I'm trading. This is why what are those old algorithms or those ODAs like FAP and Fat Turbo back in the day, 09, 2010. That's why they failed. Because the Euro British pound used to be in a, used to just channel all the time. And then they would trade it in the Asian session. I didn't really get it at the time, but what it would do is it would trade during the Asian session. You couldn't see the time, it was like highly proprietary. Everything was internally. And it would just all of a sudden put on trades during the Asian session for a few hours. And it would just bounce back and forth. It would get really good trades until it started trending. There's always going to be a trend at some point, whether it's intraday or daily or whatever. Usually intraday, there's definitely something happening. I mean, if you got a range more than 1 pip or a range more than 30, 40, 50 pips, you got a trend. Like the Euro British pound, you couldn't do that now. Not with all the stuff that's going on right now. It's just very, very, it's a lot more volatile, which is, good for intraday traders. Good for me. A lot of people don't like that, but I like it. I think it's cool. Anyways, that's kind of my spill. So I will come back with another video. I don't know if I'm gonna do them every day, but maybe I'll try to do them every day. But this is my video for now. All right, peace out.